So in today's video, I want to go over my complete DeFi game plan for Q1 of 2025. In my opinion, this is going to be a huge quarter for the cryptocurrency market, and that's going to reflect in DeFi as well. That's going to reflect on your yields. You're going to earn higher APRs. It's going to reflect on the actual asset appreciation with the assets that you have invested into liquidity pools. It's also going to reflect on your hodls and many other aspects of the industry. So we're going to dive right into today's video. Guys, if you want to follow along the stock, it's going to be linked right below this video. If you guys want to grab that, it's completely free. My goal here is to help you position yourself for what's to come in this DeFi market. If you do not have your portfolio properly structured right now, you are going to get burned regardless of how much money you actually make in profit. And the simple reason why is because you're going to end up spending your time managing your positions, and ultimately what's going to happen is you're going to get outperformed by hodl. That's just how it is a lot of the times in different portfolios when we see the bull market. Whenever Bitcoin shot from $60,000 to $100,000, a lot of people got killed in their positions, even if their positions did make money. Maybe their position made 20% or 15% when they could have made 30, 40, 50% and also earned a bunch of yield at the same exact time. That's what I want to help you prevent in your portfolio. Anyways, to dive right in, we're going to be using a tool called bitbo.io. This is a great software. They have a lot of different charts for the Bitcoin halving cycle, and I always like to look at Bitcoin. And the reason why is because Bitcoin is the market leader. Everything follows Bitcoin. Everything follows the Bitcoin halving cycle. Yes, macroeconomics are a factor, but everything follows the Bitcoin halving cycle when it comes to cryptocurrency. So what I'd like to look at is this halving progress sector. Basically, this tells us where we're currently at in today's market and allows us to look at previous prices, basically. So if we look at this shaded green area, that's where we're currently at in today's market. And then if we look back over here, that's where we're currently at in the market, but if we were in previous market, basically. So the halving over here happened on roughly May 15th-ish or so back in 2020. The halving over here happened on roughly April 16th or so. Basically, this is saying, hey, this is about 8 months or so after the halving, right? That's what this shaded area is. Now, if we were to dive into this chart, one thing you're going to go ahead and notice is, guess what? We're getting close to an all-time high, right? And one thing that I also want to go ahead and put out there is last market, we did not see all-time highs before the halving. The market before that, we did not see all-time highs before the halving. The market before that, we did not see all-time highs before the halving. That flip-flopped this market cycle. Yes, we barely hit the all-time high, but we went to $72,000, $73,000 or so before the halving even happened. It's because we had institutional activity. So this market could be very different. It could even be expedited, and I could be completely wrong. I'm just talking about what I personally think is going to happen in this market. Look back over here, roughly a year after the halving, you could see Bitcoin hit a peak of a little over $60,000 or so. It was around $65,000 roughly, basically. And then it completely tanked, right? It went all the way down to $30,000 before then rising once again to its peak of $69,000. What am I expecting this market? A very similar thing to happen, right? We've seen all-time highs already. We've breached that $100,000 price point. I personally think that Bitcoin can run up to roughly $120,000, maybe a little bit more over the next couple months, basically February or March of 2025. And when this happens, I do think we're going to see a major drawdown, right? Maybe going up 120, 130, right? And then going back down towards like $75,000, $80,000. I don't think we're going to crash as much. I don't think we're going to crash 50%, right? But ultimately, I do think we're going to see a huge drawdown in a short period of time. And since we do have institutional activity in here, obviously that drawdown will be a little bit less because market cap's just growing. Market's not going to go down as much. That's what we've seen in previous markets. But anyways, that capital is going to flow into Ethereum. It's going to flow into Sol and other specific altcoins, basically. And to put that in perspective, I want you to pay attention right over here. This is roughly 2021, early 2021, let's just say, to basically late 2022. And if we look at Ethereum over this time frame as well, this right here is early 2021. This is the area where Bitcoin was going down, basically. Ethereum's over here peaking. And then, of course, this is late 2021. Once again, Ethereum's peaking a little bit after Bitcoin. Similar situation for Solana over here as well. Now, it's somewhat of a similar situation for Solana over here. Obviously, the first peak that we saw, Solana's over here at roughly $50 or so, which seems like an amazing price now. But this is where Bitcoin was tanking, basically. That money was flowing into altcoins. So basically, what I'm expecting Bitcoin to do is see a pretty big dump at $120,000 or so. That's kind of like the ideal price. Obviously, could be lower than that, could be higher than that. I have no clue because I don't have a magic ball. Regardless, I think Bitcoin's going to see a dump February, March, maybe April of this year. It's going to see a dump. That money's going to flow into Ethereum. It's going to flow into altcoins. It's where alt season starts, basically. Money rotates basically. And then of course we see better returns for those types of liquidity pools. Ultimately, I do think that Bitcoin is going to see another slight peak, not much higher, but towards the end of the year, towards the end of the market, basically peak just a little bit higher than it did before, basically. And then of course that money is going to flow once again into altcoins, and then the market's going to flip bearish, basically. So again, you need to take profit in phases depending on what you are allocated in, basically. So to break that down, I think Bitcoin is going to hit a peak near February, March, maybe April of 2025. When it does, there's going to be a major drawdown. This is where it gets interesting. Obviously, the capital is not just going to outflow out of cryptocurrency. It's going to actually flow into altcoins and stuff like Ethereum and Solana, basically. And then after that, we expect Bitcoin to make another run towards the end of 2025, or just towards the end of the bull market, basically. And that would be the end of this bull cycle. That's what I'm expecting. Again, it might not happen. I'm just telling you what I personally think can happen based on my experience in the market. I do not have a magic ball. So talk about my strategy for Q1. 60% is going into strategic hodls. These are assets that I want to have full market exposure to that I think are going to grow substantially. I am not buying more Bitcoin or buying more Ethereum right now. I've already locked in my price of $1,100, $1,200 per Ethereum token, locked in my price of $30,000, even $40,000 per Bitcoin, basically. I've got good entries on these. And yes, I was dollar cost averaging for a period of time. I was leveraging up for a period of time as well using Aave, but now I am not buying any more Bitcoin or Ethereum, basically. I am sticking that money in more high growth assets that can see huge growth when that alt season comes around. I'm talking 5 to 10x growth when that alt season comes around. And it's important to be prepared for that growth, basically. Now, again, when I can, I'm borrowing against these assets. So about 40% of the overall portfolio, which is not 40% of 60%, it's 40% of the overall portfolio, which means that the other 20% I can't borrow against. That I am borrowing against at a 40% loan to value ratio. So I know that's a lot of 40s right there, but think about it this way. If I have $100,000, well, 60% of that, so $60,000, is going to be invested into HODL assets, not in liquidity pools, right? And then 40% of the overall $100,000, which is going to be 40K, that right there is going to be on lending and borrowing platforms, because I can then go and borrow against those assets. And when I borrow against that 40K, I'm borrowing at a 40% loan to value ratio, which means 40% of 40K, it's about $16,000 basically. So that would be my borrow essentially when I'm borrowing against these assets. It's kind of the strategy that I'm taking right there. Again, my goal here is to stack more of my core holdings during dips. So that also plays into my liquidity portfolio. I'm taking the income from that and parking it into HODLs to kind of balance out my portfolio. And then of course, jump on high conviction LP opportunities when they present themselves. So whenever I have that borrowed capital, if there's a really, really good opportunity in the market right now and I don't have free capital, I can just borrow against assets and use that money to take advantage of that opportunity. Next off, 35% of my money in growth LPs. This is 35% of the overall portfolio. I'm using crypto to crypto correlated pairs here. Now, when I say growth, I mean positions where I'm getting full market exposure. My divergence loss is absolutely minimal. This is something that nobody else on YouTube will show you because frankly, their portfolios are getting completely killed by divergence loss. It's just simple as that. When we look at my portfolio, I have $3,400 in total earnings, and I have a $3,150 profit compared to holding in the market. If we were to dive into these positions right here, which matter of fact, we're going to basically. First one, Ethereum to Aave, this actually has $0 of divergence loss, which is obviously different price oracles. It's going to show roughly a 7-cent gain. $0 of divergence loss here though, basically. And of course, all my earnings are profit against that divergence loss then, $582 in income. Now, with that being said, I also have $360 of income over here on spec to Ethereum. It's actually the worst performing one. I have $246 of divergence loss, only putting me at a $113 profit versus HODL, which means yes, I am profiting against holding the market, but at the same exact time, this position is not doing great. This money is going to be allocated elsewhere pretty soon. I also have this Ethereum to Aether pool where I have $24.51 in total earnings, and I have $3 of divergence loss right here because I am in correlated pairs, because the assets that I am investing into have high growth potential. And of course, guys, all that money from the prices rising, I witnessed, right? If we take a look over here at Ethereum to Aether, I have a total of $12,000 nearly in overall profit, $8,200 is earnings, but $34.81 is just from prices appreciating. And all of these positions right here are profiting against holding in the market. Now you notice I do have this one position over here that didn't do quite so well, $1,900 in earnings and $37 profit versus HODL. But by rebalancing that, I was able to get into this much better performing position right over here. And then same exact thing goes over here. I had had like roughly a 50% profit margin on my yield. Again, it's all about fine tuning the strategy. But again, 35% of my money is allocated to these growth liquidity pools. And by the way, if you guys want full exposure to what I'm currently doing in the market and my game plan for making the most money possible, that's what I do in my DeFi legacy program. I coach people one-on-one to help them build out portfolios just like this, where they have a portion of their capital allocated to strategic hodls. They have a portion of their capital allocated to growth liquidity positions that are also generating high income while minimizing divergence loss. And they have a portion of their portfolio allocated to those income generating LPs. So again, you don't want to be fighting divergence loss when the market is moving. That's something that you really want to be careful of, because when the market starts to move, things are going to start to diverge. It's just going to happen because there's volatility. You need to be prepared for that. 5% is allocated to overall income liquidity pools. So these are like crypto to stable ones. I don't allocate a lot here because obviously the gains are capped. You're getting sold into the stable as the price moves up. I want upside exposure, but these positions, I just want to generate consistent income with low risk. So doing like 120% APR, so on sold to USDC or Ethereum to USDC, that helps out a lot when it comes to investing into higher risk growth LPs, because I can take the income from here and allocate to higher risk growth LPs, just like I'm doing over here with my spec to Ethereum position. This one was primarily funded from the income generating liquidity positions I had, basically. So it's somewhat house money if you like to think about it that way. Now that wraps it up for exactly how I'm structuring my portfolio in Q1. The next thing I want to talk about is my game plan when Bitcoin peaks. So number one, I'm going to be shifting my Bitcoin into Ethereum and Sol first, and of course moving into specific altcoins that I've been tracking and altcoins that I've already invested into. I'm going to be buying my first house in Q1 of 2025. So adding a big liability to my finances, obviously. So of course I will be taking some profits to the bank. I'm going to be paying the majority of this house off using profits from DeFi and of course money that I have already saved up over the past couple years. Obviously there's nothing wrong with securing some real world liabilities in the middle of a bull run, right? Whether it's going and buying a fancy car, as long as you plan on taking full profits, and as long as you have a plan to pay that liability fully off, right? Don't go and buy an expensive car at the very peak of the bull run and then hold your assets until the very bottom of the market. Horrible idea. But if you have a strategy like this in place and you have money and you are generating income on top of what you're already generating in DeFi and on top of the gains that you're already making in crypto, then you can safely do something like that, right? I can safely buy a house because I have an income generating business outside of DeFi as well. And again, yes, I said liabilities. I am purchasing a primary residence to replace my apartment that I currently live in, which is $3,250 a month in rent and $500 in utilities per month. There's no equity here, obviously. So I'll be purchasing like a $500,000 home, 50% down on a 15-year note. Right now I'm quoted at 5.25% interest rate. Principal portion of the loan averages to roughly $1,400 per month, right? It's the principal portion of the loan. Interest averages to about $625 per month. So at least I'm building roughly $1,400 per month in equity, which is going to grow over time. Property taxes, roughly $650 per month. Insurance, $300 per month. Utilities, probably about $750 per month. So I pay $32.75 for my house, right, versus $37.50 in rent. And I actually generate some equity in the home. And of course, I get a much bigger space, much better space in my personal opinion. I can have my outdoor gym. I can have it structured how I want. So I'm excited for that. Obviously, that's a little bit just sharing on my game plan when Bitcoin peaks and what I plan on doing there. But yeah, I just wanted to go ahead and show you that. And guys, this right here is not relying on Bitcoin price or anything like that. It's just strictly money from my business and of course taking some profits from my DeFi passive income positions and some profits from cryptocurrency assets. So how am I managing income? What am I doing with my LP position income, right? Because as I mentioned, I have the 60%, 35%, and 5%. This portion right here is generating income. What I'm doing with that income, number one, I'm building more positions. I'm getting more exposure to my core hodls. I'm keeping my portfolio balanced at my target allocations. I do not sell assets or sell liquidity positions to balance to 60, 35, 5, unless of course I'm taking profit on the asset right then and there and it makes sense to, right? I use my income to balance out my portfolio when it gets out of whack. Phase two, I take strategic profits. As the market starts to do its thing, I'm moving some of that income into my bank account, right? I'm selling a little bit of my hodls, putting it into the bank account, so I have something to show for it, right? And I'm also taking some income from my liquidity positions and I'm parking that in my bank account as well. So once again, I have something to show for this bull run. Remember, unrealized gains are not real until you actually take them. If you have an unrealized gain of $150,000 right now and you ride that down to the bottom of the bear market, you might have an unrealized loss then. And we don't want that. We want to be able to make the most money possible. So again, if you want to execute this strategy, strategy together, some that we can walk through in my DeFi Legacy program, coach you one-on-one. I'll play a pivotal role in your portfolio. So will my team as well. They're going to be there to walk you through everything. There's weekly group coaching calls in there, and you're going to have full access to our community, our roadmaps, our frameworks, everything like that. So again, last thing I want to go ahead and mention, there is a difference between having a plan and actually executing on that plan perfectly and flawlessly. So if you're ready to maximize your income potential this cycle, you want to actually have something to show for it this bull run, let me know. Links down below in the description. Hope you guys enjoyed today's video. If you did and you found it valuable, right, maybe you're not interested in DeFi Legacy, it's completely fine. Just drop a like, subscribe, make sure to turn on notifications so you don't miss out on my content. I will see you guys in the next video. Peace out.